Hello, this is Sheryl Willis over at Go Arizona Real Estate with a December 2023 update for you on the Phoenix real estate market. This is not a year-end wrap-up because obviously we're only reporting to November. And really what the intent of my videos are to let you know what the current state is from a buyer's perspective. The majority of the people that have found me online through YouTube, thank you very much for your following. You are looking to buy in the greater Phoenix area sometime in the next few years. And so you want to know what's going on right now. If you watch these videos on a monthly basis, when it's ready for you to make the purchase, you will be up to date on everything that's going on. But here's what's happening right now as I'm reporting this video. Number one, we have seen a 6% appreciation year over year from December 22 to 23. So again, all those doomsdayers and naysayers that were putting out videos at the end of last year saying it's going to crash, well, they were very wrong. And so we can actually look back now and see that. Now, is it jumping up exponentially like crazy high? No, and we do not want that. Like I said, it's been a moderate 6% year over year, and that is anticipated what the greater Phoenix area is going to see over the next many years. In fact, if you look back over the last 20 years, even though we have had an extremely up-down crazy market over the last 20 years, if you look at what the market would have appreciated at 5% on an annual basis, we would be in the same spot that we are today. So if you're looking long-term at real estate in the greater Phoenix area, 5% is a real good basis number because, again, at any time you take a shorter period of time, you're going to have much more volatile type of numbers. For instance, even when you're looking at the median number, the greater Phoenix area is really difficult to show you what that median number is because it includes our luxury market as well. So if you are looking at the day-to-day, people that live here, work, live, and play in the greater Phoenix area, they're not buying $4 million, $15 million, and $20 million homes. But when those homes do sell, it pushes up our median number. Also, when you see those prices going down, people freak out and say, oh my gosh, look at all the list prices that have been declining. Those are list prices. That's not the value. Here's the number one thing that affects values in any city, and that is supply. If we have a short supply, even if we have a short demand, then we're going to have a balanced market. If we have a short supply and that demand goes up, then we are going to have what we did experience over the last couple of years, and we don't want that. But guess what's happening, guys? Interest rates are already starting to tick down a little bit. And so for those of you who have been waiting for the rates to come down so things are more affordable, unfortunately, you're not going to be in this race alone. Now, being that we should not, when I say should, not be seeing Wall Street back in our game, I don't think it's going to be as crazy, but I do think we're going to see multiple offers again. In fact, one of our clients wrote an offer on a home that's been on the market for over a month yesterday, and I just got a phone call from the agent that they received 3 offers. Now, they liked our offer best, and they also know our lender, so they're giving us an opportunity to be the highest and best and win the deal. Again, that is why you need to give us a call. It really makes a difference on who you work with and your relationships. So as we see the market changing right now, you got to give us a call, because what's really keeping things slow, if you would, and when we say slow, we don't mean prices or values are going down. What we mean is the volume of transactions. We have seen a decline of 40% of transactions. We've also seen a 40% decline of buyers, and we've seen a 40% decline of inventory. So again, with everything going down, it makes it a balanced market. I'm telling you, you're going to, again, if you look at my video from last December and what I was telling you to do then, you at this point have lost 6% of that appreciation. Now, here's what a lot of people might say: I can't afford today's interest rates. Well, as I'm shooting this video right now, interest rates are ticking down unusually. Again, I am not a financial analyst. I am not an economist. I do pick the real estate market apart, but I have to tell you, I've had to learn a little bit more about the treasury and the bond market and all this stuff. So in anticipation of what the feds will be doing in the near future, they've already started to drop the interest rates. And that's without the feds dropping their rate. So what's about to come? Well, nobody really knows. Of course, nobody has that crystal ball. But for those of you who have gotten your ducks ready and you're ready to rock and roll, we have a couple of people that are closing in January and interest rates just went down and they got the lower interest rates. They're in the fives. Here's why, guys. Whether you're looking at new construction or resale, here's what's happening today, and this could change very quickly, literally overnight, because our market changes like that in January. Here is a builder that is saying if you buy a home from us, right now it's through the end of the year, if the home is at $500,000, you put down 10%. So you're going to be financing $450,000. What we're going to do is number one, we're going to do a permanent buy down for you down to 5.5%. Your 30-year mortgage is going to be 5.5%. Okay. Number two, we're also going to give you some additional money, which in this scenario equates to a little over $10,000. We're going to give you some additional money and we're going to do what they call a 2-1 buy down. Here is the screen to show you exactly what this means. First year is going to be like making a payment 2% lower, like at 3.5%. And then the second year is going to be 1 year lower at 4.5%. And then third year, when it resumes to its normal interest rate at 5.5%, here is what the payments will be. So a couple of things. Number one, if the rates go below 5.5%, sometime between now and the end of that third year or 2 years period of time, you can refinance and use whatever money is left over from that $10,000 that they've given you to use again as even more buy down. You can reuse it, any unused money. So that is a great opportunity. And even if you don't refinance, to be honest with you, I paid off my home at a higher rate than 5.5%. But even if you don't get an opportunity to refinance, you choose not to, you kind of escalate into that price. Here's the thing, guys, especially for the first-time home buyers. First-time home buyer, that bucket of buyers out there right now is the most pent up bucket of buyers. We're talking 45 million people that were in the market or kind of in the market when the interest rates went up. And so they've stepped out. And over that 2 years, now they are in between that age of 26 and 36. And guess what? Once the interest rates go down, they're going to start evaluating. You're going to start evaluating what you're paying in rent. If you are renting from an institutional owner, you are not only paying rent, you're paying some exorbitant other ancillary costs that would be just like property taxes, homeowners insurance. But here's the thing, guys, if it was your home, you would also be earning that 6% appreciation. And on a $500,000 home, that's equivalent to about $30,000 a year. Look, if you're looking for long-term financial gain, financial wealth, financial stability, owning your own home is the single most important thing for you to do. Not a car, not a car. So many of you have $800 car payments and such. Let me tell you, get those paid off. If you are watching anything on the news, like here's what's going to happen over the next couple of weeks, just letting you know. You're going to be seeing all kind of market predictions. You're going to be seeing people looking back on the year, but they're going to also be trying to talk about the future. No one can predict the future, but I can tell you this, two things. Number one, in real estate, nothing happens overnight. Even when the world shut down in the spring of 2020, there was only a hiccup for about 3 weeks. 3 weeks, guys. And that's when everything shut down. Like lenders weren't lending, title companies weren't closing, no one could leave their house. And it only went hiccup for 3 weeks. Nothing happens overnight. Even the market crash in 2008, that's the number everybody uses. It actually started in 2006 and it didn't hit the bottom until 2011. Nothing happens overnight. So we can tell you what the trajectory is in the greater Phoenix area, but also on a national number. The greater Phoenix area, here's the situation. We are the fifth. Now it's the fifth. Thank goodness we're not near the top, because I'll tell you, when we're near the top, everybody talks about how Phoenix is going to bust again. But we are the fifth fastest growing state. Number one is Florida. Number two, believe it or not, is California. There's still a lot of people moving into California. Number three is Texas. Number four is North Carolina. And guess what? Arizona is number 5. So I kind of like that because honestly, I think 5 is a magic number. Let's go for 5% appreciation. Let's go for 5% interest rate, and we'll be the 5th fastest growing state in America. 5's the number. There you go. You guys got it from me here. But the point is this, when you start watching everything on the news and everything, they're going to be talking about the market from a seller's perspective. We actually work with both buyers and sellers, but we are very buyer heavy and we are relocation specialists. So we really focus on moving people from another market, real estate world, etc., and finding that perfect place in the greater Phoenix area. So if you're moving here from out of state, we should be your very first call. I promise you, we are nothing like any other realtor you've seen. Here's what the number ones, that sounds funny. Here's the top reason sellers are going to get off the fence, and hopefully we're going to see more inventory. Because let me tell you, if interest rates go down and more buyers come in the market and we don't see more inventory, we are going to be in a world of hurt again, which we don't want that at all. So Wall Street, listen to me. We don't want you in our real estate market. Okay, number 1 is going to be family ties. We're going to see more people decide they're tired of living out in the cold by themselves. The kids have already grown and gone, and they are going to move to wherever they are living now. That's going to be the number one driver, grandkids, right? Number 2, people are realizing that, you know what, I've lived in this little tiny home for such a long time, my first home, my second home. I need to now move into a larger home. Now that interest rates are coming down, they are going to really consider, because they have a significant amount of equity, they're going to be moving into those bigger homes. So we're going to see some of the smaller homes hopefully come on the market. Number 3, here's the thing. Sellers love the interest rate, their monthly payments, but they don't love the house. So they might have outgrown it. Maybe it's starting to run down. Let me tell you, even for investors, people that have owned their homes for 20 years, it's now time to put a new AC, a new roof, new windows, redo the pool. It's getting expensive. It might be a good idea to make that move now that we are going to see interest rates in the 5s in 2024. And again, the builders have already tested the market. They know that people are moving with 5s. Here's the thing, guys. At first, when interest rates were going up to 5 and 6, it's because we were comparing it to 2 and 3%, right? Then when it got up to 8%, now we're looking at the 5s in the near future. It's kind of exciting. So welcome to the new norm. The next thing is going to be number 4. The reason for people to move is going to be they're tired of living in their home and they don't want to put the money into their home. It makes more sense to upgrade their home by moving to a newer or a nicer neighborhood. Okay. Number 6 is we're going to see a lot more people pull the trigger on that vacation home, especially people that are still late in their life and they're still working and they have a few more years, but they want to move into a city that has a lot of activities that they could eventually retire in. This year is going to be very good. With interest rates going down, people have been thinking about it for the last couple of years. They're going to pull the trigger. This does not mean necessarily a 55 plus community. It just means that they're going to move to the greater Phoenix area specifically for everything that it has to offer for those of us who are enjoying life in our more senior years. The next reason people are going to be moving is honestly tapping into that equity. They have hundreds of thousands of dollars of equity in that home. And now that interest rates are low enough and we can still get sellers to buy down rates, pay for closing costs, they are going to be moving down, moving to a nicer neighborhood, moving closer to work, moving further away from work, whatever that dream is. When they have a couple $100,000, they might be able to put $100,000 in the bank, a couple $100,000 towards a new home, buying down that rate. And you know what? The math works. The biggest reason people are going to be moving to the greater Phoenix area are still the top 2 reasons. The first one is going to be for job relocation. There are so many companies that are moving here, and even the big ginormous ones that have announced over the last couple of years, they still haven't even opened yet. So those people are still going to be moving here. And I'm talking about Taiwan Semiconductor that will be in the northwest part of the greater Phoenix area. They've moved their opening date to 2025. So there's going to be some more of that, people moving in ahead of time. And then we also have LG Energy that is underway, and even freeways and everything that's going on in the Southeast Valley. It is insanity what's going on in the Southeast Valley. And again, we still have so many cities that are projecting each of them 70 to 100,000 people. We're going to have 1 million more people living in the greater Phoenix area over the next 10 years. And if you're curious about really what's going on in the Phoenix area on all different avenues, you got to watch my channel, Living in Phoenix, on YouTube. If you haven't already subscribed, check out my newest video that I just released that talks about all the things that have changed since our population has just skyrocketed. Look, guys, I am here to answer your questions. Whether you're thinking about buying a home right now or next quarter or next year, you got to give us a call. There's so much going on. And I'll tell you, with interest rates pending a downward motion, it's going to happen like this. So stay ahead of the game. Let's just get the ducks in a row so that when you're ready to pull the trigger, we're ready and we can work together and get you in the perfect home. All right, guys, I can't wait to hear from you. All you got to do is give us a call, shoot us a text, send us an email, days, nights, or weekends. We got your back when moving to Phoenix, Arizona.